Hi, how is everyone doing today? I have an exciting opportunity. It's in real estate and it's an apartment building that we're going to be closing on June 30th, and we're looking for investors to participate in it. I prepared some slides so I can show you about the deal. So right now I'm going to share you this screen. Hopefully everyone can see this. So this is the apartment building, and it is a residential and institutional fix and flip opportunity. The expected ROI is 17 to 19% per annum. The minimum investment is 50,000, and it's the money is going to be out there for 5 years. So on this slide, why Sudbury? Sudbury is growing over the years, and it has just under 200,000 people in population, and it's the center, and it's a city located in the middle of Ontario. The appreciation of the real estate there has grown double digits, as you can see here with the Cree research, and also the two-bedroom apartment units have also increased by 10% when I was doing the research on it, to about $1,600 per unit. Sudbury has Canada Revenue Agency that's there, and also mining. There are also big box stores like Canadian Tire, Walmart, and a lot of people from the southern Ontario is going towards Sudbury because the prices in Toronto is just quite expensive, and it's very difficult to cash flow without a large down payment. The strategy of this project will be to first start in the daycare area of the building. The building has 3 levels. The daycare is in the basement, and then there are residential units on the main and second floor. The daycare also covers half of the main floor. So we will focus our efforts in the daycare first and fix up all the outstanding maintenance issues. Once that is done, we will rent it out as soon as we can, because I have a hunch that the daycare will be the most difficult part to rent out. After that is completed, we will move on to a unit that is half renovated, and we will fix that up and then rent that out. The final step is to finish the renovation, finish the unit and finish one of the units and split that into half, and that's on a 3rd floor. It's a large unit. We're going to split that in half and then rent that out as 2 separate units. Once all the interior stuff is completed, we're going to go outside and do the any miscellaneous work that needs to be done on the outside of the building. The renovation and the property management will be done by Rock Solid Property Management. And this is a referral from my real estate agent. And also my neighbor uses this company to manage their 7 units. I've also met with the owners from last month, and they seem to be very nice people. The property is essentially, I described that there's 3 levels. 4 units are currently rented to residential tenants, and it's structurally sound. It just needs some cosmetic work. The location is in a Class B area, in the Donovan area. So it's not the flour mill, and it's not Class A. Class B is where we focus where we specialize in. So I believe is a strong market to be investing in this area. In terms of timeline, so we close on June 30th, and then we will meet 2 more times with the property manager so that they understand what is needed from us, so they can start the work as soon as we close after June 30th. On June 30th, the renovation is expected to last about 8 to 10 months till April of 2023, and at that time we will look for a institution to refinance our mortgage, and then we will be holding it onward for another 4 years after the first year of stabilization is completed. The first mortgage is with a private fund, and they're charging us 9%. And then the second mortgage is with the seller. So this deal has a vendor take back, and they're charging us 8%. And the reason for that is we want to have more money in our pocket to do the renovation and have more cash reserve. So having this seller take back mortgage will help us enable that and have a stronger, have more cash in the bank. And because of this, there is a slight price difference compared to the appraisal price. So the appraisal price came up to 1.43, and then our purchase price came up to 1.45. But like I said, in this market, it's very difficult to have a vendor, to find a vendor take back deal. And with the money that we have from cash reserve, it would go toward renovation, as we don't have to put as much down payment into the deal. 12.5% will be coming from the vendor, and then 12.5% will be coming from us. And then the rest of the 75% will be coming from the fund, which would be the first mortgage. So the minimum investment for the investors is $50,000, and the projected sale price is 3.2. So after 5 years, the profit should be around $64,000, and that equates to a 17 to 19% return. And the way I calculate 3.2 is by two ways, and I took an average between those two numbers. The first way is from my partner Clark. He suggested an 8% increase in appreciation per year when he did his research, so we used that number. And then the second method is using the NOI divided by cap rate method, which came out to around 3.3. We took the two averages and came out to 3.2. So that's how we did that equation. And there are, so the exit would be pretty simple. There are three different types of exits. Number one would be a 5-year hold, and then we will sell the property and split the profits in proportionate to your investment. The second will be to continue holding, but we will do a cash out refinance to try to pay back all the investors' initial investment, plus they will continue to receive distributions afterward. And then the third option is a buyout by the operators, which is us, and at a predetermined formula. And then that predetermined formula would be most likely an appraisal from a third-party service, such as an accountant or real estate appraiser, to appraise stocks. And then once we have a value, that would be the buyout price. The distributions and profits are split 30% for the investors and 70% for the operators, which is us. And we are putting $600,000 down, and then the total investor portion is 30%, making the entire investment $900,000 in total. And this would be covered this would go toward renovation, soft costs, and cash reserve. Soft costs are basically legal fees, broker fees, appraisals, land transfer tax, stuff like that. And then the distributions will start after 12 months, conditioned to seeing that we have a strong cash reserve fund, and the distributions will happen every quarterly. The closing date again is June 30th. And then there is a one-time asset acquisition fee, which the operators will take, which is $14,500, and that amount is essentially go towards our time to prepare this deal together. So visiting the property, speaking to the legal, to the lawyers, to the accountant, to the appraiser, inspectors, and to speak to property management, just to put this whole thing together on the investor's behalf. So that's the fee for that. And then there is an ongoing 1% annual asset management fee, which goes to me, and I will be preparing the memos, monthly memos. I'll be speaking to the property manager on a monthly basis to ensure that we are on target for our 5-year exit, should we sell by then. And then I will be preparing the reports as well, with the help of my partner Donna, and she will be preparing the financial component. I will take her components and then put it into the report and send that off every quarter. So these are some of the photos in the property. These are the nicer units. This is the daycare in the basement that I was talking about. And then this is the unit that needed renovation. So it's half completed. And there's one more unit upstairs on the 3rd floor that needs to be split into 2 units so that we can rent that out. So this is the most important part in the presentation, which is the financials. So we're buying it at 1.45. The down payment needed again for us is 12 and a half, because remember there is a vendor take back and they're doing 12 and a half. And then the first mortgage would be 75%. So the legal fees are estimates. This is $32,625 is the broker and lender fee that they're charging us. The appraisal and inspection fee is accurate. That has already been done. This is the estimated land transfer tax. And if you add it, and then our appraisal fee, our acquisition fee of 14,500. So you add that all up, that is the amount to close, 267,000 and some change. We have some renovation budget. The contractor mentioned that it would cost around $200,000. So I bumped it up by $50,000 to be safe, so 250. And then we have, I feel that we need around $350,000 of cash reserve to be safe in going into this deal. And then the suggested cash total would be $900,000. We will hold for 5 years. The first year would be the stabilization process. So if you add up all the numbers, there is a loss. The current rental income indicated here of $64,800 is the current rents that are coming in from the people that are staying there now. And after that, we will refinance most likely with an institutional, a B lender or a credit union. And that is why the mortgage will drop after that. And then we will, the rent will also increase because we will fully, the whole unit will, the whole building will be fully rented out. And for the daycare, it is expected to earn around $10,000 a month, because when we look at the research, there is a lease set up in place when we saw of $10,000 a month. But just to be a bit more conservative, we dropped it down to $9,000 a month to put into these figures. So an idea could be to rent out first half of that floor to a school, like a tutoring school, and then the basement would be to a tutoring company, to a daycare. So that way we have maybe 2 tenants in that particular space. That would be paying around $9,000, project $9,000 a month. So that's how we came up with that income. In the professional fees, that is my 1% acquisition asset management fee, along with a couple $1,000s of accounting fees. But the main bulk of that piece there is the property management fee. They're doing 9% plus HST, 9% of the gross income plus HST. So that's where the professional fees are coming in from. And then the repair and maintenance are basically miscellaneous repair costs, snow removal, lands, a bit of a cleanup throughout the year. That is what that fee is for. On exit, we are expected to sell at 3.2 million. After you add up all the costs, the agent fee includes the HST fee, the profit for the investors is 30% of the profit. So that equates to around $383,856 out of all the investors. And that return is around 17.91%. And these slides, this slide here is an example of what you would receive after you get your initial investment back. So if you're investing $50,000, you'll get your $50,000 back plus $63,976. So you can see the more you invest, the more you would get back. This is a team: Clark, Donna, and Caine, myself. I'll be doing the asset management, and Donna will be looking after the accounting. And then Clark is syndicating the deal with along with all of us as well. If you like to participate in this, if you see that this deal fits within your criterias, then we will send you a commitment letter to sign. And then after, there is no deposit required. Once you signed, we normally ask for the funds to deposit it, in this case, into our bank account. And then right after that, at the same time, we will show you the shareholder agreement so that you would have it on hand. And then, we do it all at the same time. That is what the lawyer suggested us to do. These are some of the FAQ questions, and this is the contact information. There is one thing. So the appraisal price came in to a little bit less. So I'll tell you the amount. It came out to 1.43 stated right here. This appraisal report is 91 pages long. So if you want to review this, let me know and I'll send that over to you. There's also an inspection report, and that's 44 pages long. And basically, the inspector said that the property is in good condition, just needs a little bit of cosmetic work, which is what we are going to do in year one. Another item that people bring up is the are penalties if they need to exit this project prematurely. So there are no penalties. As far as I know, it's just a matter of finding someone to replace your position. So if you put in $50,000, we'll find someone to replace the $50,000 so you can take yours out. Whatever distributions you've collected in the past, you get to keep that. Whatever distributions that the new investor will receive, including profits, they'll keep that. In terms of legal fees to do this, I got to confirm with the lawyer, but as far as I know, it's just a matter of finding someone to replace your position and then just giving the shareholder agreement to the new investors. So that's all I have for now. Hopefully it's something that fits within your criteria. I know you'll have questions, so feel free to email me or contact me. I'll put the information on the lower third title there. We essentially want to work on larger and larger projects. And if you don't see that this is a fit for you, maybe you'll know someone that might be interested in coming on board, and then hopefully you can share that information with us. So and then we'll work together in the future as well. So thank you for your time and look forward to hearing from you.